what seems to be happening here is what we call degrossing, what hedge fund guys call degrossing. They're just taking down exposure. The overall market is down 2%. As Tom points out, I see quality names, some of the big tech names down. I see high beta names. I see momentum names, banks down. Almost across the board, we're down about 2%. This seems like people are just taking down some exposure overall.
Yeah, I think it's hard to know what people are doing on a day-to-day basis. People have a lot of different constituents, time frames, performance goals, but I think that the long-term trend remains pretty clear. I think the 10-year going back to 120, below 120, no pivots from the Fed policy. I think the long-term trend still points to a pretty strong reflation, ultimately shifting into inflation.
James, I want to talk to you about this new inflation ETF that you started because it's a very interesting idea, but it seems hard to execute to me. How do you decide what stocks are going to benefit from inflation? And give us an idea of 3 or 4 stocks that are in this, particularly the commodity type names.
Sure. So the first thing we want to do is we want to identify an end market that we believe is inflationary, which we broadly refer to as hard assets. So a tangible, finite asset that can benefit from pricing pressures. But then the most important part is we overlay a capital-light business model where we want to emphasize businesses that don't put a lot of the balance sheet at risk and don't spend a lot of capital in order to earn their returns. And then finally, we overlay a valuation framework where we're not just going to overpay for a good business and a good vertical.
Yes. So I want to just bring up some of these companies. So you have here Texas Pacific Land, for example, Archer's Daniel Midland, Wheaton Precious Metals, Franco-Nevada. These are all commodity stocks. Texas Pacific Land, for example, they own a lot of land. What do?
Sure. So Texas Pacific is truly one of a kind where they benefit from owning royalties on the oil and gas production of any number of companies operating in West Texas, whether it be Chevron, Exxon, EOG. They also own the land. So if you want to develop pipelines, if you need access roads, if you need power, if you need water, you need to pay them an easement. And the most important variable here is that they spend virtually no money to earn their revenue because they're earning a cost-free royalty on oil and gas production or a cost-free easement on somebody crossing their land.
Yeah.
So they can benefit from this inflationary cycle without committing all of that capital.
And you have some metals companies, gold companies, Franco-Nevada Corporation, for example. What do they do and why would they be an inflation holding?
Sure. So Franco-Nevada's main business is streaming or royalties in precious metals, where they have a very similar low-cost, very capital-efficient way of benefiting from the gold and silver mining activity of other companies. So I believe that gold is ultimately going to have a bid, especially as you see pressure on the dollar, inflation expectations tick up. Franco-Nevada has a very low break-even cost by virtue of these streams and royalties, so they can benefit from a rising gold price without having to put more and more money back into the earth because, as I mentioned, other people are spending the money to extract the gold and silver.
You also own Archer Daniels Midland now. This is, obviously, it's a grain company. They process grains. But there's an inflation play here that I never really understood or realized, actually. Can you explain what the inflation play is with owning ADM?
Sure, and I love this company. They basically crush or mill a lot of the world's flour and corn into starches and sweeteners and flours, as well as seed oils. But basically what they earn is called a crushing margin. So if you have inflation in soybeans, corn, wheat, all of these input costs, it goes into their grain elevators, it goes into their crushing facilities, and they earn a fairly defensible, if not rising, margin on processing that throughput. Then they sell the end products to the end customers where they push on all that inflation. But they're earning a margin on these inflationary forces or inflationary end markets without really needing to commit any more capital themselves.